So we want to continue with where we ended with lesson one and two. We were right on discussing how this precision support resistance work, and how we can identify it, how we can leverage on it, and then how we can frame setups around it. So the logic around precision support resistance is we are looking for an exact price or zone, which is very compact, like price is not far off, where price have used as both support and resistance. Okay. The same area or the same zone has been used as a ceiling and has been used as a floor or a support. Buyers use that place to buy and sellers use that place to sell. So from our previous backtesting or from the previous lessons backtesting, we came to this area on Euro USD where uh, we can see that for a long time that price has been resisting around this area. Always price hit here, hit here, and drop more. Price finally comes back to that area, and this time it consolidates or ranges around that same blue line. So look at the blue line, same blue line, and then um, we get constant closes above the blue line. But once we get a close below the blue line, it sells. So check it like in this way. A close above the blue line, price goes up. A close below the blue line, it sells. Now, finally, price gave us a move above it and it uses that same blue line to buy. Okay, from here, boom, it buys long. So we are looking for the long or extended moves. Okay, so what are we saying here? Price uses here the same place, hit same place to sell down, long, plenty like this, move, make the move down, 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 down. Okay. And the same, look at the move up to here, from here to here. Then it comes back to it, retested, and uses it to make a move up to here too. This So it price uses it as resistance to drop. Now it has used the same price, which is the blue line, as support to go up. Okay. So now we come back, it goes up, comes back to the same place, drop below it, goes close above it, and then boom, go up again. Comes back to the same place, go up, consolidate around that, go up above it, closes below here, and boom, drops, sells. Okay, kept selling, and look at how big the sell is. Price sells, 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 keep selling. Okay, so what does this tell me? It tells me that that exact point there, okay, that place, that blue line, the big blue line, around that blue line, forget about the other lines up and down, but around that blue line, it tells us that anytime price comes back to it and we get what I call indication, okay, indication that is going to go up or go down, we might have a move. So now, currently, this is the about I think about 4 months now. So this is from July. Okay, up here is from like July of 2025. And then around here, the price we got here is October 2025. Yes, what we are getting here is like in October. So from July to October, this is what has been happening on Euro USD. Okay. And we have seen that from years back, price now finally come back to the same blue line, and then it hit the blue line with but did not get a body close above it, rejected, and we get a close below. You see the red candles. Second time, price come back to hit it, drop, and then it's down. Then let's extend it. Price goes up. Now it gives us a body close. Look at this green candle. Look at how big it is. This is a sign that we are getting an indication that anytime we get another body close above here, price is likely to buy, to go up to the next precision support resistance. Okay, so what gives us the confirmation is the indication. You can draw your precision support line, an area or price where we have seen it being used as support and resistance. Okay, that exact place where you see that anytime over the years or months, price keep reacting there. Okay, we will need indication. Okay, so this big green candle here, this big green candle, this thing here, is telling us that, is giving us an intention that the bulls, okay, the buyers, they will be strong above here. Anytime price gets another big close above here, price can continue going up. That is the meaning of this big green candle closing above the blue line. Why am I convinced that that is the case? Because here we did not get a big close. Here we did not get a big close. Why is it that price could have just hit it here and drop again and sell if it wants to sell? But it has revealed its intention to us that it will want to buy more when it closes above this blue line. But after giving that intention, it's now saying, okay, look at here, there is a big bearish candle that has also closed below the blue line. It is telling us that I want to buy from this point upward, but this bearish close here is telling us, but I want to sell first. That is the logic. I want to buy more above this blue line, but this bearish big candle that is also closing below the blue line is indicating to us that I want to buy above here more, but no, I want to sell below here more first, which means that after the sell, if price is to go up and close above here again, we will have buys. Okay, so on in the general sense, what do you as a trader have to make out of this? Okay, so one, the concept is that sellers are here. Sellers are sitting right on the blue line and they are pushing price down, down, down. You can observe here. Okay, sellers are here pushing price down, down, down. You see, sellers are here and their job is to be pushing price down to the downside here on the blue line. Okay, now here too we saw this is like in what year is this? This is March of 2018. No, July 2018. Wow, that's a long time. This action is like September 2018. Okay, great. So sellers are sitting here pushing price down. Now, sellers are sitting here pushing price down on the blue line. On the blue line, what happened before we got a buy above the blue line. So let's say if sellers are here pushing the price down, what will happen if the sellers become weak? Frank, what will happen if the sellers become weak?
The buyers will come in.
Very good. And how will we know the buyers will come in? They have to give us a sign, intention, indication. And normally you will get the indication in how the body, the candle closes above that area or line. So look at here. You see the first green candle here. It is
Yes.
big and it is big and went above the blue line. It overtook it up. So though we saw consolidation ranging up, down, up, down, up, down here plenty, and we even saw a bearish, big bearish candle also sweeping down, closing below here. The first indication here was the close. So at this, the message this is sending is forget about all this thing that happened after, but the message is I want to buy from there. So when he gave that message, a lot of noise happened. He bought, came down, came down, came down, bought, came down, came down. But at the end of the day, and that's what the market will do. All this that happened here is what we call ranging here.
Okay.
Range. This is what we call accumulation or ranging that we learned in the first session. Okay, this is,
The sideways.
he said what?
That's the sideway trend.
Yes, sideway market, yeah. Ranging. You can put it in a line up, draw a line up, line down. You see that prices just within this range, consolidation. But at the end of the day, before price broke out of that consolidation, let's see. It gave us this big, so you have, that is why we are saying that the how the candlesticks are looking or closing matters. That is what communicate to us the intention of the market. So look at this move. Price went up close above the blue line, then it gave another green candle that closed. Then from there, though a bearish candle came down with it, this is what we call the retest. See, the from this area, we had this high. So price moved up from below here and took out this high. I don't know if you guys are seeing that. It took out this high, right? When it took the high out, impulsive move to take the high out, what happens? It gave what we call corrective. So corrective. So we get an impulsive move up to here, corrective to here.
So please, that means the impulsive is not always at once.
No, 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 no. You see, as time goes on, you will understand that it depends on the time frame you are using to monitor or to do the analysis. Because
Okay.
this is a daily time frame move, and it could be a lot of movement or candles on 30 minutes or 15 minutes or even 1 hour.
Oh, okay.
Okay, yeah.
Mm.
But with what we are seeing on the daily time frame, this is a move that takes a previous high, then it drops down to here. And then from here, it goes up to somewhere here and drops down again here. And then from here, it took off. Okay, from here, let's say it took off. Let's say it took off, up to here. Very long. So this is the formation. If I want to bring that here. Okay, so this is the formation. This is what happened. This is the move. Okay, so but already there was a previous price action here. There was a high here. So where is the shift or break of structure? Here, somewhere here. We took this high out. We took this high out. Good. Okay, so this previous high here was taken out. This impulse, this move took it out, swept it. That is break or shift in structure. Then it gave us a pullback corrective. So for this corrective, when we measure with the Fibonacci, it only came to equilibrium, 50%. It didn't come to discount, or let's
Mm.
say 78.6% or 61.8% or 100%. No. And that is perfectly fine. So it depends on where price is at the time where this move was happening. But it gave us at least a fair price, equilibrium. And from there, boom, it gave us a new high. So this is a bullish market. What should we expect? We should expect a pullback again and then probably another move to the upside. Okay, if we want to see bullish market like higher highs, lower highs, higher highs, lower highs. Okay, but we are not interested in that now. We just want to show what happened around the blue line before price took off and gave us a buy. But my interest right now is on the precision, how precise the blue line is. Exactly on the blue line, that is where price took off. Okay, exactly here. Okay, the move took off exactly from the blue line. This means that those sellers are on the blue line that are pushing price down. When they become weak above the sellers, the buyers will take over, as Frank said. Do you guys get the logic here?
Yes, please.
Good. Above the sellers. So let's say Frank has $2 million and Frank is a seller, a financial aspect for expert for his bank, and he's a seller, so he's only shorting or selling the market. Now, Frank's Frank has been selling here all the time. Okay, Frank sells anytime price comes to the blue line. Frank sells, sells, sells. Now, Frank sells here, make profit. Then he decides to close his profit. Okay, close his position, and only left, let's say, $10,000 position of volume running as a sell trade. Now, the moment Frank became weak and not putting in big money again, Jeffrey saw the opportunity and put in $100 million. So that ran over Frank's $10,000, came back to the same resistance that Frank was using to push the price down, used it as support, and allowed people like Uchena and myself to who have small monies like $10,000, $500, $100 to also participate in the market. So this is a very big move from the smart money, but they gave an equilibrium price here, and we also came in. So when price went up, it came back to use the blue line. We all came in again. Oh, it's okay. Price is above resistance. So what do we do? Buy above resistance. Buy above resistance and sell below support. Okay. The normal concept is that sell on the support and then buy sell at support. No, sell on resistance and then buy on support. That is the normal support resistance concept. Okay, but from the precision support resistance concept that I am introducing to you guys, what we are doing is we want to flip it. We want to see that the normal resistance where sellers will be selling, we want to see that become weak so that we can take advantage of it and buy. Are you guys getting what I'm saying?
Yes.
Yes, the normal thing is that at resistance, ceiling, it should go down. But we want to now wait and observe and see the big boys come in with big money like this big
Mhm.
candle. We want to see a close above the sellers, the ceiling being chopped off or like pierced through. We want to see the sellers get tired so that we will now buy above resistance. Ichi, now we good? Perfect.
Yeah, yes, sir.
Perfect. Thank you. So now when price went up, what did I say? So price went up, but it came down, it pulled back down. Okay, so this was where price started from here, and it took this high out, which is the break of structure, and it did not give us discount, though. Discount is 61.8% or 78.6%, something anything below 50%. It never gave us, but it gave us a very big buy. Now, market went up, and dropped back into the discount zone that we were expecting. You see where it came back to? Then from here, boom, it went up again. So you see, always market will give you an opportunity. That's why you don't need to rush it. But where did that opportunity happen? Exactly exactly when it came below the blue line, and we got another indication. What is the indication I'm talking about? You should see a bullish momentum or activity. Okay, see, though sellers were here and they all came below the blue line, price reversed up, and then we see one bullish candle, another big one. This is the momentum we are looking for around precision support lines. Once price goes or closes above it and price is reacting off discount zone, we are good to go. Okay, so this is the move we are waiting to catch. But according to market structure, if we are perceiving this market as a bullish market, what do you guys think we should have? We got this high here previously. So this move from here, Frank, what do you think this move should do if you are perceiving a bullish market? Iche, now what do you think this move from down here should have done?
Should have swept the
It
previous
should have
high.
been, yeah.
Good. It should have taken this high out so that we will get a higher high. And then in a bullish market, we will only expect a lower high somewhere here and keep going up, up. And that will be an uptrend. But the moment it went up and failed to get to take the high out, we call this failure swing. It failed to swing. This is a sign that there is a possible reversal that is going to happen. Okay, anytime you get a failure swing, you get a failure, price comes to discount and goes up and fails to take a high. The high is called a failure swing. So, but for us, our goal is that we are only monitoring the precision support resistance line and seeing what price is happening. So we are not interested if we were looking at if we took our trade from here, let's say here exactly after the close of this indication candle, and we were even targeting these internal highs, even here. This is a lot of money now. Okay, this is a lot of money. Okay, even if we were targeting here. Normally, for me, like this, normally I'll target the high point, like high here. Okay, but it will not always give it to you. But at least I'm in lot of profit, crazy profit. Okay, so I've made profit already. Then now price reverses or fails to swing, it comes down. The moment it fails to swing, and we are now getting a body close or indication below our precision support, this is a sign that there is a sell coming on the way. So this is like framing the trade only around the precision support line. Okay, but if we want to go into the trade very well, we could get entries from up here even before price comes down here and gives the indication that it wants to sell. But we are not into that yet. We just want to study the precision support line for today. So we get an indication. What is the indication? You need an obvious body close, a big body signaling sell momentum. Okay, this is the body, this is the candle.
Okay.
Whether you are using 4 hour or 1 hour or daily time frame, you need an obvious body close, okay, below to give you the indication or the intention. And like Salim says, when he sees the close, he will wait for a retest. Okay, so this is the indication. You price comes down, allow it. He waited for the retest and took the trade. You target this low here, you make a profit. Price comes back up, takes your entry out, it hits here, drops again, it gives you another indication with this bearish close below here. Okay, then this time if you can also wait for another retest. Okay, you can wait for the retest here again, a retest, but here it never gave us a retest. It never came to retest. So sometimes it will happen like that. So that's why you have to use a lot of concepts together to be able to frame the setup. But the close is what I'm talking about. That is the indication. After you have your precision support line, you now look for indication, intention. And we see the intention are in the way the candle that closes below or above it looks like. Is this clear? Am I clear? Am I clear?
Yes.
Yes,
Perfect.
please.
Yes.
So we get the indication here, and then boom, we are not looking for buys again. Okay, because there is indication that it's going to sell. The only thing we look for is retest. Okay, retest of the same area. And if we get rejection and engulfing candle, we sell. Sorry that you are new, you don't know what is engulfing and all that, but you will learn all of that. Good. So we get this nice move and look at how far the sell came. This is what we call reversal, total reversal. Okay, from the top there, look at how, even from the blue line, look at the sell. So you catch the sell there, and if you have this understanding of the higher time frame, look at where it came to. This a lot of millions of dollars. If you have big capital and you take this trade and you can hold, this is a lot of money. Okay, your life will change, your family, everybody changes because of this move. You bring joy to your family. Okay, good. But now currently we see price has given us a reversal pattern, like price goes up. We got this low here and price comes up, comes up to price comes up here. Now this is a pullback because now we are bearish. We are bearish. Now this is a pullback. When we got this pullback, what do you guys expect after this pullback here? We expect to get a new low so that this bearish or downtrend will be valid.
Yes.
But it just came where? Here. Oh God. It came, we got it here, and it just came here and then took the high out and gave us, kept going up. Do you guys get my point?
Yes.
So what is the meaning of this?
Please, can you repeat it a bit?
I'm saying that when price gave us this move down here, it took
Yes.
it took this previous lows out, this, and took
Yes,
these
please.
lows out. So what do we expect? We expect a pullback, and then we expect price to drop to give us
Drop
a
again.
new low so that we can
Then,
now say that this is bearish, like
yes.
downtrend. But when it pulled back, it stopped here and it kept going up. So what is the meaning of this? This is where we add another concept called the range. So this break of structure becomes a range. So we measure. Now, price only came to 50% close to 61 and dropped and failed to swing, failed to give us a new low. Then it pulled back up to 78.6%. 78.6%. That's where price is right now. Okay.
Okay.
So the goal is that price is at premium and we is supposed to sell. If it's going to really sell, this sell should be big. It should give us a new low so that we will now see that there is a downtrend. But if it doesn't give us this low and comes up to somewhere here and rejects off and keeps going up, then it's likely that this downtrend is also now changing and is going to now start to give us an uptrend. Do you guys see what I'm saying?
Yes.
Yes.
So the bigger picture is that I expect price to now come and give us a new low. And this, if you catch this move and it happens, so that's why this is technical analysis, but it is anticipation. If you ca- if your prediction becomes right based on your analysis and you catch this move from here, this is millions of dollars. You stay in this cell for months and years because it will take a long time before price can get us a new low, before we will take this low out, before we even take this low out and then take this low out. It is going to take a long time. Okay, because this is a daily time frame. So this is the bigger picture. This is what I am anticipating. Is either price comes down to take all these lows and give us a new low, or it comes and retests somewhere here or here and then finally give us a reversal to the upside, which means we have failed to take this low, a failure swing. Okay, so but how are we for today? We are only looking at the blue line. So when price kept going up, it hit the blue line again. What happened? It sold. Then it went up again, hit the blue line here again. What happened? What do you guys see? Sellers, the sellers are active on the blue line, sells.
Yes.
Then it went up. Then this time, the third time, when it hit the blue line, it went over it and closed body. What is the meaning of this? This is indication. This is intention. It's telling us that buyers want to take over above the blue line. So anytime price comes back up to the above the blue line, we should expect more buys. So for me as a trader, I'm going to mark this thing down. When price start buying or going up, I'll be observing this area. If it gets here and I see a big bullish candle, I'll only wait for it to close above, retest and rejections around it, and I'll take a buy from here.
Okay.
Do you guys get me?
Yes.
Perfect. I'll take a buy from here. Why am I confident with this? Because in previous years and the past price action, it doesn't fail. that precision support line doesn't fail. It's been holding and making price work well. So I will believe in it. Okay. Anytime price is below it, it sells. Anytime price is above it, it buys. This is the concept of the precision support line. This is just an introduction for today. We're going to talk about it more in the next class. We are left with only 5 minutes to close. And when this meeting ends, we will end for today. We will continue tomorrow. We are doing this for 4 days: today, tomorrow, Friday, Saturday, and Sunday, and then we will end because I'll be busy from the week next week going, so I wouldn't have time. So I hope all of you learn a lot from these 4 days of intensive technical analysis of forex, and then you make the best out of it as a foundation for you to build on and learn more things. Any question up to this time? So the last thing I would say is we have a bullish intention of the blue line, but when it happened that way, price quickly also gave us a bearish intention. So right from here sells. So let's see, price goes up, reject, reject. What I am waiting for right now is I'm waiting for price to go up. You see, I've drawn my chart. I'm waiting for price to react somewhere here, go up and retest the blue line. And if it gives a bearish indication, I will be selling from here. I will be taking a sell right from here. If it gives a close above it, I'll be taking it. That's why I said this precision support framing of trade. If the sell fails quickly, you can jump on the buy. Why? Because you have the knowledge. Because if this sell fails, if it gets a bigger close here, bullish close, it's going to go for a buy. You only wait for a retest and you buy. And if it's going to sell, it will hit, drop, and you see an engulfing bearish candle here, around here, just like it happened, for here. Bearish engulfing. Look at it. Big red candle that engulf everything. And then from there, we are seeing the sell. Okay, so I'm waiting for price to pull all the way up to the same place, and then I will jump on a sell or I will take a buy. That's what I am waiting for on Euro USD right now. Okay. So let me go to 4 hour, but this is a daily time frame overview or understanding or learning. Within the smaller time frames, we can frame multiple precision support lines, but we can study that in our next meeting, which is tomorrow, because we can find internal precision support. That's why you see a lot of lines. Okay, the horizontal lines, they are all precision support lines.